Hey there, everyone. Welcome back to our channel. If you're new here, make sure to hit that subscribe button and turn on notifications so you never miss out on our videos. Today, we're diving into a fascinating topic that's been making waves in financial world, SPACs. Now, you might be wondering, what exactly is a SPAC, and should I consider investing in one? Well, you're in the right place because today we'll break it down together. But first, let's start with a key question. What is a SPAC, and why has it become so popular in recent years? A SPAC, or Special Purpose Acquisition Company, is essentially a shell company that's created to raise money through an initial public offering. The primary purpose of a SPAC is to acquire or merge with an existing company, often a private one, allowing that company to go public without going through the traditional IPO process. Let's unpack this a bit further. Imagine a group of investors who have a keen interest in a particular industry, say electric vehicles. They create a SPAC and go public, raising funds from investors who believe in their vision. The SPAC then has a set time frame, usually about 18 to 24 months, to find a private company to acquire. Once they identify a target and finalize the acquisition, the company becomes publicly traded, and the SPAC essentially disappears. One notable example of a successful SPAC is the merger between the venture capital firm Social Capital and the healthcare company Clover Health. In March 2020, Clover Health went public through the SPAC, raising about $1.2 billion. This merger was highly anticipated, with investors excited about Clover's innovative approach to healthcare technology. However, it's worth noting that not all SPACs have had successful outcomes. For instance, the merger between the SPAC called Churchill Capital Corp. And Lucid Motors was initially celebrated, but the stock saw significant volatility post-merger as the market reassessed its valuation. According to data from SPAC research, the number of SPAC IPOs skyrocketed in 2020, with over 200 SPACs raising around $70 billion. This trend continued into 2021, with SPACs becoming a legitimate alternative for companies looking to enter the public markets. However, as interest began to wane, 2022 saw a significant drop in SPAC activity, highlighting the cyclical nature of investment trends. Now, let's talk about the pros and cons of investing in SPACs. 1. Access to new opportunities. Investing in a SPAC can give you access to innovative businesses that may not yet be on the public radar. Some of these companies might be at the forefront of emerging industries, offering potential for substantial growth. 2. Speed and efficiency. SPACs often provide a faster route to going public compared to traditional IPOs. This can be particularly appealing to investors looking for quick entry into promising companies. 3. Flexibility. SPACs can negotiate terms with the target companies, which can sometimes lead to more favorable valuations for investors compared to traditional IPOs. 1. Lack of transparency. One of the biggest drawbacks is the lack of transparency before the merger is announced. Investors are essentially placing their bets on the management team of the SPAC without knowing the target company's performance metrics. 2. Potential for poor investments. As we mentioned earlier, not all SPAC mergers lead to successful companies. Investors must be diligent and conduct thorough research to avoid investing in a SPAC that could fail post-merger. 3. Time constraints. SPACs have a set time limit to find the target. If they fail to do so, they must return the funds to the investors, which can lead to uncertainty about the investment. So, should you invest in a SPAC? Here are a few key points to consider. Do your research. Look into the management team of the SPAC and their track record. A strong team can significantly increase your chances of a successful investment. Assess the target company. Once a merger is announced, take the time to evaluate the target company's financial health, market position, and growth potential. Be cautious with trends. The SPAC market can be highly volatile, so be mindful of market trends and sentiment. In summary, SPACs can offer unique investment opportunities but come with their own set of risks. They provide a quicker path to public markets and access to innovative companies, but they also carry the potential for poor investments and lack of transparency. So, if you're considering dipping your toe into the SPAC waters, remember to do your research and invest wisely. If you found this video helpful, give us a thumbs up and don't forget to share it with your friends. Also, drop your thoughts or questions about SBACs in the comments below. We'd love to hear from you. Until next time, happy investing!